Hello, my name is Bob Bush, and I'm here with my colleague, Kalila Imperatrice. We are in the Division of Registration and Inspections, which we may refer to as DRI, and we primarily work in outreach and international coordination. That includes activities such as this video, publication of our spotlights, which we will also refer to in this presentation, and coordination with non-US regulators and non-US registered firms.
We hope that you find this presentation helpful. As we go through this presentation, please know that you can pause or back up at any time to fully read any of the slides, as we will only be highlighting certain aspects. We certainly understand that some of you may want a more in-depth understanding, so we included a much more detailed description in our slides.
The views we express are our own in our official capacity as members of the Division of Registration and Inspections, and do not necessarily reflect the views of the board, individual board members, or other members of the staff.
This presentation is an overview of our inspection programs and processes. Separate presentations will be available for other activities of the PCAOB.
An accounting firm, whether U.S. or non-U.S. based, that prepares or issues an audit report for a public company or for an SEC-registered broker or dealer, or plays a substantial role in those audits, must register with the PCAOB. A public company is also referred to as an issuer in the U.S., and outside the U.S., it is often referred to as a public interest entity, or PI.
Registration requires that accounting firm follow the PCAOB standards and rules, all of which are available on our website under About and Oversight. This presentation is focused on inspections. This number may change, but at the end of 2024, there will be approximately 1,600 registered firms, and over half are outside of the U.S. We inspect in over 50 jurisdictions.
Our inspections are designed to review portions of selected audits of public companies and broker-dealers, and to evaluate elements of a firm's system of quality control. Each inspection results in a report specific to the portions of each audit firm inspected, which may summarize identified deficiencies. Broker-dealer inspections are currently aggregated in one report not specific to a firm, and it is published once a year. Each inspection, although consistent and objective, is designed based on the facts and circumstances of the firm under inspection. We look at both level policies and procedures related to quality control and to engagement level audits. Any deficiencies are communicated.
We have 3 inspection programs, one for global network firms, one for non-affiliate firms, and one for broker-dealer firms. As Bob mentioned, the objective of our inspections are consistent, but consider the facts and circumstances of the registered firm in the audits they perform. Currently, there are no non-US based firms subject to inspection under our broker-dealer program, and as such, we have not included that program in our presentation. We will cover the following stages of our inspection process in this presentation: pre-planning of our inspection strategy for a year, planning for the specific firm inspection, performing a firm inspection, concluding on a firm inspection, firm response to our comment forms, if any, draft inspection report provided to a firm, final inspection report provided to a firm, and remediation if required by a firm in response to our inspection report. But first, let's cover a couple of important topics.
This is an overall summary of the timeline of a typical inspection. We start with planning. The inspection, or what we sometimes call the field work, and the finalization of the inspection. We're going to cover all of this in more detail throughout this presentation.
So let's start our deep dive into the inspection process.
During pre-planning, which is an annual event and updated as necessary, we consider the population of registered accounting firms broken down by those that issue more than 100 audit reports and those that issue 100 or less audit reports. Audit firms that issue more than 100 audit reports each year are inspected annually. The other audit firms are inspected on at least a triennial basis. We also consider whether the firm is part of a global network. Focusing on audit firms of public companies, we make estimates to consider resource needs, whether we will be working with non-US regulators, whether early access to the work papers is available, and industry, language, or other specialized skills that might be required.
We then begin scheduling the inspections. One of the first steps is a notification letter. This letter includes everything you would expect: the timing, standard request for information, and contacts. These letters are either sent directly to the audit firm or through the non-US regulator in a joint inspection. We also provide direct contact at the PCAOB for any questions you may have. The notification letter has 2 exhibits that list information or documents that must be made available to our inspectors. The first exhibit is firm-specific information. We use this information as we assess the firm's system of quality control. The second exhibit is policies and procedures. This is also used as we assess the firm's system of quality control.
We also include an Excel file. We call it an IIF, which needs to be completed as described in the notification letter and returned to us. We use this information, which we reconcile to information from the Securities and Exchange Commission, to make our final engagement level selections for the inspection. Completeness and accuracy of this information template benefits both the registered firm and the PCAOB. Inaccurate information can lead to a change in our selections while we're in the field.
Once we have established who we will be inspecting, it's time to start planning the actual firm inspection. For all audit firms, but particularly for larger audit firms, we gain an understanding of all the work being performed. We also obtain information to understand what referred work is being performed. In the case of substantial role work, a term defined by our professional standards, we look to ensure a registered firm performed that work. We also try to get a representative mix of public company audits where a going concern is disclosed. The auditor's evaluation of the public company's ability to continue as a going concern, such as public companies' inability to access funds through borrowings due to violation of debt covenants or deal cancellations, or public companies' intent and ability to act on disclosed plans, or requires heightened audit skepticism. Some of our risk-based selections also include public companies with poor financial ratios, but a clean audit report. We consider other factors during our selections as well. For smaller firms, we often do not have the need to evaluate all of these concerns because the audit firm may only have a few public company audits. There are other matters we must consider. For example, the timing of our planned fieldwork, the archiving period of our planned selections, the resources available for the inspections, protocols with non-US regulators, and other logistical matters.
Clearly, you've just covered a lot of information. So let me summarize it. We have determined what firms we plan to inspect. We have notified those firms, working with or without a non-US regulator, no less than 45 days prior to our planned inspection fieldwork. We have selected the audits and the audit areas, including non-financial areas such as independence, that we will review. The audit firm has no opportunity to limit or influence our selections. In selecting public company audits for review, we generally focus on attention on audit areas we believe to be of greater complexity, areas of greater significance, or with heightened risk of material misstatement to the public company's financial statements. We generally select the audits most recently completed by the audit firm, but may also select audits completed in prior years if, for example, there are no recently completed audits, or to be unpredictable in situations where the audit firm has limited public company audits. We also select referred work if there is any. We have established our plan to evaluate the firm's quality control system. We've set up meetings with audit teams and firm leadership, worked out any logistical issues, and ensured we are able to connect our IT systems while at the audit firm's location. While our notification letter to the firm communicates specific areas of focus, a complete set of work papers, including hard copies of documents, if any, must be provided to our inspectors. There are no exceptions to this. The PCAOB often enters into formal cooperative arrangements with foreign audit regulators in order to minimize administrative burdens and potential legal or other conflicts that non-US firms may face in the foreign jurisdiction where we'll be working. Now, it's time to discuss performing the inspection. Remember, for larger firms, this can be over several months and include a visit to several offices. For smaller firms, this can be over 1 to 8 weeks. In most cases, our field work is limited to 2 weeks at a time.
The firm's system of quality control is assessed during all parts of our inspection. During the inspection, we will discuss and understand the current system of quality control, ask to see evidence of its operation, and we will use our specific engagement level reviews to ensure that policies and procedures of your system of quality control were followed.
QC 1000, a firm's system of quality control, and related amendments to PCAOB standards, rules, and forms was approved by the SEC on September 9th, 2024. QC 1000 replaces standards that were developed decades ago by the American Institute of Certified Public Accountants before the PCAOB was established, and were adopted by the PCAOB on an interim transitional basis in 2003. While QC 1000 requires all accounting firms registered with the PCAOB to design a quality control system that meets the requirements of QC 1000, registered firms are only required to implement and operate the quality control system in compliance with QC 1000 when they lead an engagement under PCAOB standards, play a substantial role in the preparation or furnishing of an audit report, or have current responsibilities under applicable professional and legal requirements regarding any such engagements. Under QC 1000, until it becomes effective, I should say, QC 20, System of Quality Control for a CPA firm's accounting and audit practice, will be the basis for our quality control system evaluation. QC 20 specifies that a firm's quality control policies and procedures should encompass the following elements: independence, integrity, and objectivity, personnel management, acceptance and continuance of issuer audit engagements, engagement performance, and monitoring. Generally, prior to arriving at the firm for fieldwork, we will have arranged meetings with the firm's leadership to present their policies and procedures covering these elements. This was all in the appendix, attachment A and B. The inspection team's assessment is derived from results of procedures specifically related to the audit firm's quality control system, as well as from an analysis of deficiencies identified in individual public company audits reviewed. Each inspection team customizes the procedures it performs for each audit firm, bearing in mind the audit firm's structure, procedures performed in prior inspections, past and current inspection observations, the size of the firm, an assessment of risk related to each focus area, and other factors.
For tone at the top, the inspections team's procedures focuses on 2 points. First, how the firm's leadership is structured and operates the audit firm's business, and the implication that leadership structure and processes have on audit performance. And then whether actions and communications by the firm's leadership, the tone at the top, demonstrate a commitment to audit quality. For a partner evaluation and compensation, the inspection team's evaluation may include the results of interviews of audit partners regarding their responsibilities. The inspection team procedures focuses on 3 points. First, whether the audit firm's processes related to partner evaluation, compensation, admission, termination, and disciplinary actions could be expected to encourage an appropriate emphasis on audit quality and technical competence, as distinct from marketing and other activities of the firm. Then, the audit firm's processes for allocating its partner resources, and finally, the accountability and responsibilities of the different levels of firm leadership with respect to partner management. For independent and non-audit services, the inspection team will read the audit firm's policies and procedures and evaluate whether those policies and procedures are sufficient to meet the objective. The inspection team will then develop a testing plan and perform testing to ensure those policies and procedures are followed.
For client acceptance and continuance, the inspection team may consider the firm's documented policies and procedures in this area. In addition, the inspection team may select certain public company audits to, first, evaluate compliance with the firm's policies and procedures for identifying and assessing the risks involved in accepting or continuing the audits, and then observe whether the audit procedures were responsive to the risks of material misstatement identified during the process. For monitoring, the inspection team may interview members of firm's leadership and review documents relating to the audit firm's identification and evaluation of and response to indicators of deficiencies in audit performance. In addition, the inspection team may review, first, documents related to the design, operation, and evaluation of findings of the audit firm's internal inspection program, and may compare the results of the inspection team's review of public company audit work to those from the internal inspections review of the same public company audit work. Then, steps the audit firm has taken to address possible quality control deficiencies and assess the design and effectiveness under the underlying processes. Then, policies, procedures, and guidance related to aspects of independence requirements and the audit firm's consultation process, as well as the audit firm's compliance with those requirements and processes. And finally, audits of public companies whose audits had been reviewed during previous PCAOB inspections of the firm to ascertain whether the audit procedures in areas with previous deficiencies have improved.
The inspection team will also discuss with the audit firm's leadership, among other topics, audit policies, procedures, methodologies, supervision of other auditors, consultations, engagement quality review, and finally, archiving. In addition, we are currently collecting information over the readiness of a firm to implement QC 1000, cybersecurity policies and procedures, and other matters. We will review policies and procedures established to provide the audit firm with reasonable assurance that the work performed by engagement personnel meets applicable professional standards, regulatory requirements, and the audit firm's standards of quality. We will review these policies and procedures, cover planning, performing, supervising, reviewing, documenting, and communicating the results of each engagement, including that they address engagement quality views pursuant to AS 1220 Engagement Quality Review. For each public company audit area selected for review, the inspection team reviews the engagement team's work papers and interviews engagement personnel regarding the procedures performed in those audit areas.
In addition to looking at selected audit areas, which we sometimes call focus areas, we also perform inspection procedures on every public company audit selected to assess compliance with certain aspects of the auditing standards related to independence, fraud, audit findings, audit committee communications, Form AP filings, the auditor's report, engagement quality review, and audit documentation. These procedures enhance the robustness and consistency of inspections that assess an audit firm's compliance with applicable laws, rules, and standards.
The determination, communication, and documentation of CAMs is done every year in connection with the current period audit. Depending on the circumstances, some matters may be CAMs each year, where other matters may be CAMs in a single period or intermittently. The audit documentation is required to be sufficient in detail to enable an experienced auditor with no previous connection with the engagement to understand the determinations made to comply with the provisions of AS 3101, the auditor's report on an audit of financial statements when the auditor expresses an unqualified opinion.
Any deficiencies that we identify are communicated in a written comment form. The firm has an opportunity to provide a written response to a comment form. Any deficiencies identified through an inspection are evaluated for inclusion in the firm's inspection report. We consider many factors before issuing a comment form. Our inspections are designed and performed to provide a basis for assessing the degree of compliance with our rules, the rules of the SEC, and professional standards in connection with an audit firm's performance of audits, issuance of audit reports, and related matters involving public companies. Each comment form stands on its own. In other words, it is written to outline the facts and background information, convey the severity of the deficiency, and specifically identify the standard not followed.
We should mention that we have also developed a critical thinking framework to help our inspectors determine the severity of the deficiency, which includes consideration of whether the deficiency is documentation related or audit performance related. We also consider the impact the deficiency has on our consideration of the engagement quality review performed.
Our findings can broadly be categorized by audit standards, rules or other professional standards, quality control concerns, independence matters, whether self-reported or found by our inspection team, or application of the applicable accounting framework. The comment forms we issue will have a site so that a firm can easily reference the professional literature. And now we're going to discuss our considerations for concluding the inspection.
We have regular meetings with firm leadership during our fieldwork to update them on our progress. For smaller audit firms, this may just be a midweek update, but for larger audit firms, this could be a weekly meeting. At the end of each inspection, we have a formal status meeting to communicate our findings. This status meeting should never have surprises because of our ongoing discussions. We also discuss what's next in timing. For non-US inspections, we also discuss work paper, transfer log, if necessary, related to work papers we are requesting to receive to retain to support our comment form. The formal comment form we issue will have been discussed many times with the engagement team and firm leadership. We obtain copies of the audit work papers that support our facts of the comment form, and it is internally reviewed to make sure it's consistent with how we've concluded on the same or similar issue with other audit firms. We strive to maintain consistency and to be fair. The comment firm is delivered either directly or through the non-US regulator, the non-US local regulator, and we ask the firm to return it signed within 10 business days. When the firm returns the comment form, they have agreed, accepted, or disagreed with the facts and/or the issue. They may or may not provide us with additional information, but any additional information must be considered carefully. In other words, Why wasn't it available or known to the firm or engagement team while our inspection team was performing the fieldwork? The comment form also asked the firm to tell us about their consideration of AS 2901 and AS 2905 as applicable. These standards relate to how the identified issue might impact their issued audit report. The comment form also asks the firm to tell us where the firm's quality control system might have failed to detect the deficiency. When we receive the firm's response to our comment form, we consider any new information very carefully. In most cases, the comment form moves forward and is evaluated for inclusion in the inspection report. We are now at the point of issuing our inspection report. Before we discuss that, I want to describe what happens first. First, we will have discussed any inspection findings with the engagement team and the firm. Those findings will be communicated in writing to the firm if we believe they remain a concern. The firm will be given an opportunity to respond in writing to those comment forms, and we will assess any new information provided. Second, we will make a draft inspection report available to the firm, and the firm will have 30 days to submit a written response. We will review your response and take action as the board considers appropriate.
As mentioned earlier in the presentation, our comment forms are the basis of our inspection report. Our inspection reports have several sections to communicate categories of findings. Part 1A of our inspection reports discusses deficiencies, if any, that were of such significance that we believe the firm, at the time it issued its audit report, had not obtained sufficient appropriate audit evidence to support its opinion on the public company's financial statements and/or internal control over financial reporting. Part 1B discusses certain deficiencies, if any, that relate to instances of non-compliance with PCAOB standards or rules, other than those where the firm had not obtained sufficient appropriate audit evidence to support its opinions. This section does not discuss instances of potential non-compliance with SEC rules or instances of non-compliance with PCAOB rules related to maintaining independence. Part 1C discusses instances of potential non-compliance with SEC rules or instances of non-compliance with PCAOB rules, if any, related to maintaining independence. Part 2 is initially non-public and includes issues related to the firm's quality control system. This section remains non-public to the extent the firm remediates, to the board's satisfaction, all criticisms described in Part 2. Part 3 is also non-public and remains non-public. It reports potential illegal acts and non-allowed loans to officers by the public company. And Part 4, can include both public and non-public content as it contains the responses of the firm to the draft inspection report. As we mentioned earlier in this presentation, while discussing comment forms, the comment forms become the basis of the draft inspection report initially delivered to the firm. Certain comment forms may not be included in the inspection report. In addition, we may determine that additional criticisms, such as quality control deficiencies related to themes of public company audit comment forms or supervision and review, should also be included. However, to be clear, deficiencies reported in Part 1A do not necessarily mean there is a corresponding Part 2 quality control criticism. Once all our internal reviews are complete, a draft report is issued to the firm. In addition, we will also have aligned any issues with non-US regulators, if there are any and it's applicable. The firm has 30 days to respond to the draft report. This includes any coordination time they need with their local regulator. The firm's response is fully considered. The firm can request that their response be confidential.
After the firm has responded to our draft inspection report or after the passage of 30 calendar days, the staff present the inspection report to our board to be finalized. The final inspection report is delivered to the firm either directly or through a non-US regulator and sent to the SEC. Reports are periodically posted on our website. And for US-based firms, the report is sent to the state regulatory authorities.
Delivery of the final inspection report to the firm starts the clock on the firm's 12-month remediation period.
If an audit firm remediates no later than 12 months after the issuance of the final inspection report to the board's satisfaction, criticisms in Part 2 of the inspection report will remain non-public. We have a remediation team that works with audit firms and presents their recommendation to the board. We encourage audit firms to work with this remediation team throughout their 12-month remediation period. However, consider that a comment form is delivered to the firm first, and the final inspection report is delivered several months later. So the firm has ample time to consider their remediation responses. The remediation page on our website at pcobus.org brings all of this together in one place, including links to spotlights that have been issued.
This illustration is the typical process that a firm working with our remediation team will follow, and we highly encourage frequent two-way communication. Both small and large firms are given ample opportunities to meet with our remediation team and receive feedback on their draft response prior to actions being finalized. We encourage periodic dialogue. We also send firms periodic reminders regarding important milestones. Important aspects of any change by the firm to remediate include change. Does the remedial step represent a change to the firm's system of quality control that was in effect at the time of the conduct that resulted in the quality control criticism? Relevance. Is the remedial step responsive to, and does it specifically address the quality control criticism described in the inspection report? And does it help satisfy future compliance with the board's quality control standards? Design. Is the remedial step appropriately designed, either individually or in combination with other actions to remediate the quality control criticism? Implementation. To what extent was the remedial step put in operation by the close of the 12-month remediation period? Execution and effectiveness. Has the remedial step achieved, or if sufficient time has not passed to measure results, is it expected to achieve the proposed effect that it was designed to achieve? Firms take many approaches to the remediation. We do not suggest remedial actions because a firm best knows what will work in their particular environment. The best actions, however, seem to be changes to audit methodology, additional required training, modification to policies and procedures, and, in certain cases, increased monitoring.
Most deficiencies in testing public company internal control over reporting relate to testing controls without a review element. Verifying that a review was signed off provides little or no evidence by itself about the control's effectiveness. Considerations include evaluating the precision of management review controls, testing design effectiveness, and testing operating effectiveness. Common financial statement areas with deficiencies are revenue and related accounts, inventory, accounts impacted by business combinations, investment securities, and long-lived assets, which includes goodwill and intangible assets. These areas remain relatively consistent year to year, and significant estimates, evidence, and/or data and reports used to support audit conclusions are often a component. Failures to properly test accounting estimates, including fair value measurements, result in deficiencies in many financial statement accounts.
So we've taken you through the inspection process, beginning to end. Our inspectors are experienced auditors with many years of audit background, but inspections are not audits. We provide training and mentoring to our inspectors on how to conduct an inspection, our process and methodology, and our internal documentation requirements. And since this is a non-US audience, I'll point out that many of our inspectors have taken certification courses in IFRS. In addition, external training is available to our inspectors each year to become more knowledgeable about specific industries. We publish a variety of documents that we believe are useful to our continued interests of improving and sustaining audit quality. They can be found on our website under Resources, Staff Publications.
We hope that you found this presentation informative and useful. As I mentioned earlier, remember that you can go back through and pause on any of the slides which you wish to read or consider in more detail. We are also available to answer any questions. Our contact information is included here. Remember to pause if you want to write down before this video ends. Thank you for viewing this presentation of the inspection process.
Thank you.